Brothers and sisters in Islam and in humanity at large, Assalamu alaikum wa rahmatullahi wa barakatuhu. With this episode, which is the second episode of buying a house in the United States, I'm going to give you some information on how to buy a house through Islamic channels, or through Islamic banks, as well as interest-based banks. But prior to that, I have to tell you something, that there is an entity called AMJA, or Assembly of Muslim Jurists of America, or the website is www.amja.com. They have provided a fatwa, and in this fatwa they have categorized all those financial institutions or non-financial institutions that help you to buy a house into three different categories. Now, let's say these are the three different categories. The first one, they said it's 100% pure and halal, and I personally counted it's very economical too. And I gave one example with my first episode on Amin Housing. This is the website, www.aminhousing.com, and I gave a full information on that. Now, that's the one, but if you're living in some counties of California that's not covered by Amin Housing, because I do know that Amin Housing only covers 18 counties out of 58 counties of California. But if you're living in a different state, or also with those counties that are not covered with Amin Housing, so you have to find another entity, but that's the best one, that's my choice. But now let's say the second category, based on the fatwa, not me, they say that these Islamic banks, they have some violations, and we have called upon them, they were not ready to answer. So they have some violation. It's not recommended to do a transaction with them, to do any business with them. But if you're in need, if you're in dire need, yes, you can do with that. And an example from my own self is, let's say you are given a notice to evacuate the house in 30 days and 90 days, and you have kids and wife, and you say, well, if I don't have a house, where should I live? So that's, in that case, you can refer to Islamic banks. That's just an example from me. It's not from bank. From AMJA, but that's just an example, so you can figure out what is the need or what's the dire need, but it depends all upon you. Now, the third one is traditionally interest-based transactions and banks, so they said you are not allowed to do with them. But with this episode, I'm going to give you a little bit information on this one, but our more concentration and focus is on the second one, and I will give you inshallah on that. But I have to tell you two things. One, this episode and the previous episode is just for educational purposes. It's not for something different. It's not based on any of a bank that tell me something, that told me something, or I have to refer to any of the bank. No, I'm not going to do that, but just as educational purposes, you can gain a general knowledge of how you can buy a house through three different categories. And if you have any positive or negative comment about the presentation itself, yes, you can refer to me. But if you have any positive or negative comment concerning the content or the context of this, or the fatwa issued by AMJA, yes, you can refer to them. You can have your opinions, your critics, whatever you have. That's just amja.com. You can refer to them. Now, that's the one. The second thing, when I was trying to find this information for my personal use, and inshallah someday I will be buying a house. So the one who helped me is called Yamo Sharifi, and this is his phone number. He's living in Sacramento area. You can contact him if you need to do so. And he's a nice guy, by the way. So now coming to the property type, is four different types. One is residential, it's clear from its name, industrial, business, or commercial, and then we have vacant land. Now, this one, the residential has its type too. The one is called condo, or the real name is condominium, which means a shared space between two or more neighbors. That's called the condominium. The other type is single family house, and single family house is only for one house, no shared space. Now, the third one is the mobile homes. Mobile homes, just you rent the land itself every single month, but the house is yours. You have transferred your house over there. And the fourth one is the residential. I mean, it can be embedded into condo as well, but the reason I put it there, just to give you some examples, actually three examples, that is the duplex, triplex, or fourplex. So now coming to this community-based, once again, community-based entities for restriction and maintenance. There is two. One is HOA, Homeowners Association, or you can say House Owner Associations, and the second one is CCNR, or CCR also called. The common point between two of them is they're non-governmental, but the difference is HOA charge you some portion of money every single month, but they may remove your garbage or other services they may provide. But CCR and CCNR, it can go by both names. They don't charge you money, but they may provide some restriction. Let's say they may tell you that the paint or the color of your door should be like this, or the front wall should be like that colored, or a different restriction. They may have something like that. But now, coming to finding a house itself, I have categorized that into 8 different stages. Now, somebody may categorize that into 5, into 6, or into 9 different stages, but personally I did in 8 different stages. The first one is meeting an agent or meeting a realtor. That's number 1. Once you're done with him, you will tell him that, hey, I want a house or an apartment at this price. We have this much money, cash or in the bank, and my income per month is so and so. I mean, you are giving some information so he can or she can have a knowledge of what you are going to buy. Then the second thing is the pre-qualification or pre-approval. Now let's say you are telling the realtor that I'm going to do this business through Islamic bankings or Islamic banks, or I'm going to do this based on interest-based banks. Now once you have decided that and you tell him, then he's going to tell you there is a difference between pre-qualification and pre-approval. What is the difference? Number 1, with pre-qualification, do they do credit check? No, they don't. Is it valid? It is valid, but less valid. But with pre-approval, is credit check? Yes. Is it valid? Yes. So with pre-qualification, if you are pre-qualified, let's say for $200,000, and you are going to a seller to buy a house, he or she may not accept your offer because you have a pre-qualification. You don't have a pre-approval. Some of them may accept, but most of them may not accept. But if you have a pre-approval, that simply means they have run your credit, they have seen all things about your background, your income, every single thing, and then they will give you, let's say they will tell you on a piece of paper that we can provide you $200,000. Now, if you have this pre-approval, the seller cannot tell you, no, you can't have money, because you have the pre-approval on hand. Now, that's number 1. So with loan types, with these interest-based transactions or interest-based banks, the loan type is actually 2 types, conventional loan and government backup loan, but the period of the loan period is only 2 different types. One is 15 years and one is 30 years. So with conventional loan and government backup loan, what are the differences and what are the good or bad things in these? The first thing, with the conventional loan, if you are buying a house, let's say for $400,000, you should have 20% of the house or less than that. Let's say if you have the 20%, or even if you're looking for a lower than 20%, they may ask you for your income, family size, any liability you have, or your background, or every single thing, the tax return. Then they may decide to lower that 20% to 19 to 15, or as they wish, So it can be 20% down or lower. Then what is the difference between mortgage company and banks? Well, actually, they are similar, but the difference between mortgage company and banks are 2 things. 1, the paperwork they do, it is different. I mean, the bank is one type, and the mortgage company should be different. The second difference is the requirement. A requirement for mortgage company may not be necessarily a requirement for banks. So these are the 2 different. These are the 2 differences, but the rest of the things, they are the same. Now, what is mortgage insurance? If you are paying less than 20% of the house, then the bank may ask you for mortgage insurance. Let's say if you are buying a $400,000, you may pay $150 every single month until you pay off the what? Until you pay the 20%. Once you pay the 20%, then the bank may not ask you for that mortgage insurance. Now let's say with the government backup loan, one is called FHA, which means Federal Housing Administration. The second one is VA or Veteran. The third one is called FHA or California Federal Housing Association. Now, with the FHA, they may ask you for 3.5% down, and the remaining 16.5% FHA will pay you, which becomes a total of 20%. And the 80% again goes by what? By bank. And the second one is VA, veteran. If the one who is buying the house, he himself, she himself, if she is or he is a veteran, or his immediate family member is a veteran, yes, they are eligible for VA, and that is zero down. So you are not paying anything. The 20% is going to be paid by VA program, and that's all. And third one is Cal FHA, or California Federal Housing Administration. With this one, you are only paying the 3%, while with FHA it was 3.5, but this one is 3%. So you are paying the 3%. Cal FHA is paying the 17%, which becomes a total of 20%, and the remaining goes by bank. Now, here is the thing. Once you pay off the 80% of the bank, and now you're trying to pay off their money, any of these three programs, you will pay that with interest, not without interest. Even if you're a veteran with zero down, you still have to pay in all these three different programs with the what? With the interest. So that's why I crossed a red line on that, because I'm just said you're not supposed to do with any of the interest-based transactions. Yes, you're allowed to do with Islamic banks, and that is while you are in a need or in a dire need. That's in the fatwa that I have read personally. So now coming to the Islamic banks, there are some of the things. Once you're referring to Islamic bank, they would ask you that you must have a 620 credit score or more. That's number one. 2-year tax return or more. That's number two. 30-day pay stub or your income for the last 30 days. That's the other. 2-month statement. Yes, you have to show them so they can see what is your income and how much have you spent. Now, the 3% or 5% down pay, you have to do that as well. Well, it depends. If your credit score is good, if you have good money, let's say if you have good income, actually, if your tax return was good, everything, you have no liability, they may even ask you for 3%, not 5%, but 5% is preferred. So now you're paying 5%, which is $20,000 for a house that costs, let's say, $400,000, and they're paying the $380,000. Now, it's called, well, the other thing is the no PMI, or it's called private mortgage insurance. No private mortgage insurance is required by Islamic banks. Now, the loan period for these interest-based banks was 15 or 30 years, but for this one is 15, 20, and 30 years loan period. Now, there are some costs you have to pay. One is I cost, which means insurance cost. Other one is I cost, means an inspection cost. M, maintenance. T, tax, and A, appraisal. These 5 different costs is equal to UC, means utilization cost. They're telling you that we are not, bank is going to tell you that we are not paying any of these 5 costs because you are utilizing the home, so we are not going to pay a single penny for that. That's one of the things, that's why I circle, and there's 2 more that I have circled, and once we are done with these requirements, I will tell you why. Now the second one is late payment fee. That's $50 per month. If you are making a late payment, you have to pay that. Actually, you must pay that. So LLC is $18 per month. Limited liability company. It's limited liability company. It's just $18 per month, and you can ask the bank what is it for and why do I have to pay. Once you pay off the house, then do I have to pay this or no, it's just done. It could be only until that time. The title of the house, once you buy a house through Islamic banks, the title will be on your name, not the bank. And there is some reason for that. Why? Could be the tax or other things. No A or D value, no appreciation or depreciation value, which simply means with the first episode, I did tell you that if you're doing with Amin Housing and you pay off the whole money of their portion, now you're the owner, so they do appreciation and depreciation value if the price of the house went up. So they are the one who will receive the 30% of that ratio, and you are the owner of the 70. Let's say you buy it for $400,000, you paid off in 10 years, and now it is $500,000. So $100,000 is the appreciation value. Now over there, they will divide into 70 and 30. The 30%, which is $30,000, will go to Amin Housing, and the 7 remain to you. If it is a depreciation value, which means you bought it for $400,000, now it's $300,000, so they will pay you $30,000 because they are the share owner and you are the other share owner, so you will pay from your pocket the $70,000 as well. So they are actually in both cases, and appreciation or depreciation, they are the 70% owner, sorry, they are the 30% owner, and you are the 70% owner, which becomes a total of 100. Now the payoff. Now let's come to the payoff with interest based. They may tell you that we do not accept your payoff. You have to pay this in 30 years and 15 years because we need the interest. But with this one, they say no. I mean, the moment you are ready to pay the remaining amount, we accept that and we don't charge you anything more. That's all. That's called payoff. They accept payoff at any time. So Freddie Mac is actually a federal organization that pays money to banks. And in all those banks that need money, they borrow money from Freddie Mac and they pay the interest. So now, with Islamic banks, they also, when they need money, they refer to Freddie Mac and they take money from them. But now here is the point. When I say that Islamic banks are categorized in the second category, not the first, and because AMJA, they said that they have some violations. That's why they are categorized the second, and they said if you don't need or if you're not in dire need, don't do transaction even with the second category. Now here are the three things. This one, I mean the circled ones. Number one, this one. So they said if you're the share owner of the 80%, and let's say something goes wrong and the one who is a tenant or the resident of the house, he's the 20% owner and he's paying some money to fix that. I mean, he's paying for the maintenance. Now, you're the 80% owner. Why don't you pay that? You have to pay that. That's why, that's something Amjad told the banks, that you have to take part in insurance and maintenance and some of these things. But they said no. The resident is has to pay all this because he or she is the one who is utilizing the house. Why should we pay the money? So that's one thing. Now, the late payment fee. They also told to Amin Housing that you are the share owner, you cannot charge him the late payment fee. So that's why they solved the problem in a different way, and they were satisfied with that. I mean, Amja was satisfied with Amin Housing solution, so they put Amin Housing with the first category, but Islamic Bank says no. We are not going to solve this. We have to receive this $50. Why? Because if he's paying on time, and our team is working on the papers and it's done by time, that's okay. But if he's paying late, then we have to allocate a team member to fix that, to process that paperwork of that payment. That's why we have to allocate some extra hours, some extra time for that. We have to pay that employee. That's why we have to pay this $50 to him. So that's why we charge. Now the other thing is the Freddie Mac. Amja told them that Freddie Mac is a federal organization that pays money to banks based on interest, and you are taking loan from them based on interest, as like other traditionally interest-based banks. Now, what they said, no, we are not getting money from Freddie Mac based on the interest. Actually, whenever we need money, we are selling our share. We are selling our share on Freddie Mac. That's why they are paying us money. We are not getting loan on interest base. We are selling the share. So based on these three different criteria, so Amja was not satisfied, or for whatever reason, I don't know. That's why they put them on the second category. Now here's the main thing that we are going to, actually we need as a buyer to know this. Let's say if you are paying a house for $400,000 and you are paying the $20,000 and you need to receive the $380,000 from the bank, how much would you pay to him back? Now the first thing is you have to divide this $380,000, you have to divide that by 100%, and 1% of that becomes $3,800. That's a very simple calculation that I can do. I'm not that much good in calculation. So now you find out this is the 1%. Now you're multiplying this with 3.75%. 3,800 multiplied by 3.75%. Where did we get this 3.75% from? Actually, the reason I did that, let's say if you are going to interest-based bank and you are telling them your credit score, your tax return, everything, based on that, they will tell you, yes, we will charge you 2%, 3%, 2.5%, 3.5%, 3.75, or 3.75 or 2.50 is the interest ratio of that time, interest let's say rate of that time. So based on that, you are just making a calculation with yourself to see that how much would you pay to the Islamic bank. That's just something personal you are doing and I'm doing for a personal calculation. So it may not be the case in real case. So 3,800 multiplied by 3.75% is $14,250, and now you're going to divide this for 12 months, on 12 months. So once you divided that by 12 months, it's $1,185.05. So every single month, you're going to pay $1,185.05 just as a benefit for the Islamic bank. And where did it come from? So once you are doing this, now let's say this is something based on the interest rate in the market or the benefit rate in the market, you are paying that. Now what is the actual money? I mean, the actual money that you have to pay, and that goes to your principal, so you can pay off that $380,000. You have to pay this as well. That was just, the money that we just calculated yet is just the benefit that bank is taking every single month. But with this one, so if you're taking this loan for 30 years, now we are going to calculate that way. $380,000, once again, $380,000 divided by 360 months, because 30 years is 360 months. If you're doing a 20 year or 15 years, so you can put that figure here. So 300 divided by 360 months, the principal per month comes to $1,055. So every single month you will be paying $1,055 that goes to your principal, as well as $1,185.05 that goes for as a benefit to the bank. The total that comes, let's say, around $2,200 and some dollars. That's the main topic that somebody needs to know over here. So now we have reached to the third point. The first one was meeting an agent or realtor. The second one was the pre-qualification and pre-approval and the differences between them. Now home search. Now you are the one who is doing the home search as well as the agent both. Both parties is doing the home search. Let's say you have already told him that I want a house of this price, this and that. He's doing and you are doing. You may use some apps like Zillow or Craigslist or other ones, and he's doing the same. If you find something, you can shoot to him so he can see, he can give you some guidance. And then let's say he may call the owner, he may talk to the agent of the owner to get the keys of the house and take you there to see if you like it or not for those purposes. Now let's say once you have done the home search, there is two things. Let's say if you like it and now you like to go further. One is the appraisal company. The bank who is giving you the money, they will hire appraisal company to see whether it's worth it or not. This house worth $400,000 or not. And you are hiring an inspection company to inspect where the house itself, the pipelines, every single thing, in the bedrooms and in the bathroom, in the hall, and patio, every single thing they will inspect, and they will tell you, well, it's usable for 5 years, for 10 years, for this long. So once you are done with this inspection and appraisal both, but there's one point you have to remember, that both money, you are the one who's paying both money for the appraisal company and for the inspection company. But the reason bank is hiring appraisal and you are hiring the inspection, because bank would like to know, bank need to know actually to see whether it's worth it or not, so they can give you money or not. But the price, let's say for a $400,000 of appraisal company could be minimum 500, maximum 1,000, and for inspection could be 350 and maximum 500. So you are the one who's paying both bills. Now let's say You did a home search, you did see, you did all this. Now you're doing the offer by agent. It means that you will tell them, hey, I want this, I want this house for $350,000 or $390,000, and I want you to send him the offer. Now the agent is the one who's providing the paperwork for the offer. It could be 16 pages, 20 pages, 40 pages. He will provide that. He will take your signature and send it. If the seller himself or herself is selling the house directly to him, if it is going to be sold by another agent, so he will send to that person. Or if the seller and the buyer both refers to the same agent, then he's the one who's just showing, the agent is the one who's showing to the seller directly. Now you are done with this. So if he accepts the offer and he signed the offer and comes back to your agent, now it comes to a contract. But if he doesn't accept, so that's the next part, which is called negotiation and contract. So negotiation is obviously known for just you negotiating to see if he or she can, decrease the price. And once he accepts or she accepts and sign the paper and send to your agent, that becomes a contract. We are done with this stage. Now we are going to the escrow company, which is the sixth stage. Escrow company is actually a company that reviews all the paperwork from your agent and his or the seller's agent. Now they will charge you $4,000 for their paperwork, for their services, and this $4,000 sometimes the buyer may pay, sometimes the seller may pay, sometimes it's negotiable. So mostly it is just 50-50. 50% by buyer and 50% by seller. So now you are done with this. The seventh stage is the paperwork and the documentation again. The eighth or the last stage is the closing date. The closing date is a day that, now let's say you are the one who is the owner of this house, but 5 days ahead of the closing date, you have to go and see the house for any potential disorders. If there's any potential you have to go for potential orders. If there was any disorder, you have to tell them that, hey, it is changed, or I thought this counter or this thing or that item was related to the house, but it's not there. Or there could be any scratches on the walls or some other things. You may find any fraction somewhere, so you have to tell them. But if it's okay, then yeah, you would tell them, yeah, it's okay. So now we are done with all these 8 stages from here to here, but there's still 2 questions. Somebody may ask, buyer and seller responsibilities, what is that? And agents charges, who will pay for the agents, the buyer, the seller, or the bank? Which one? So coming to the first question, buyer and seller responsibility, both sides must share all those points that are related to the transaction or to this business. Let's say the seller may tell you, or must tell you actually, that, well, our neighbor has 2 or 3 dogs and they leave them open every single night and day. That may create you inconvenience, as we were inconvenienced with that. Or may tell you that, well, this neighbor, that neighbor, this guy, that guy is not a good guy all the time. Police and the siren is there, and it's kind of disturbing. So you have to know that in advance. Or if there is any other thing, let's say there's a fraction in the wall or somewhere, he or she has to tell you that. At the meantime, as a buyer, you have to tell him or her everything you have that's related to this transaction, not something that's just secret and that's related to your own life, not related to the transaction. Now the second thing is the agent's charges. Generally speaking, they're charging 5% on the seller, not to the buyer, not to the bank, on the seller. But if it's the 2 different agents, one for the buyer, one for the seller, they will charge 5% of the total price of the house on the seller, and that 5% is divided between 2 agents. Agent for the buyer and agent for the seller. But again, the money is going to be paid by the seller. If it's one agent for buyer and seller, then again the 5% less or more, that's going to the agent again. So my brothers and sisters, I'm done with this. Once again, remember, it's just for educational purposes. I don't like to name any bank or any specific entity, but I'm just telling you, it is based on the AMJA. If you have any positive or negative comment concerning the presentation itself, please share with me. If there is anything you have that's not concerned to the presentation, but that's to the context, whether you are angry, you have critics, whatever, you know, contact Amjad through their website, and you can share with them. Even if you're going to have a debate with them, I would be glad to watch your debate. So it's just for educational purposes. It's nothing to do with any specific agent, any bank, any other organization. And inshallah, if you like this video, please share with other brothers and sisters so they can benefit from it. And inshallah, you will get the reward and I will get the reward. Jazakallah khair.